A very good morning to one and all. May I now request everybody to rise for the national anthem.
जन गण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंधु गुजरात मराठा द्राविड़ उत्कल गंगा वृंद हिमाचल यमुना गंगा उत्कल जलधि तरंगा तब शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे.
We shall now begin the inaugural session with the lighting of the lamp. May I please welcome Mr. Prabodh Thakkar, Mr. Ashish Chauhan, Mrs. Deena Mehta, Mr. U.K. Sinha, Mr. Leo Puri, Mr. Atul Mehta, Mr. Arvind Pradhan, Mr. Navneet Manot, and Mr. Ashokan for the lighting of the lamp. Let me introduce to you Mr. Prabodh Thakkar, the President of Indian Merchant Chamber. Mr. Prabodh Thakkar has been an impassioned driver of the Indian and the international insurance and reinsurance business. His untiring efforts and commitments have taken global insurance, of which he is a director, to become one of the largest brokerage and consultancy in India. Business excellence aside, he's a strong and prominent personality who's transformed education, talent into skill, employable development. He's already on the path of setting up a state-of-art educational and skill development center, an insurance institution which is proposed in the futuristic Gift City at Gujarat. He's proposed the name of the project to be Global Knowledge Center. He's currently elected as the president of the Indian Merchant Chamber, a 108-year-old trade body where the father of the nation, Mahatma Gandhi, was an honorary member. He's also served as the chairman of the insurance committee at the IMC from the year 2004 to 2012. Besides his commerce background, he also holds an associate degree from the Insurance Institute of India and is a faculty at various institutions and colleges related to insurance and risk management. May I please welcome Mr. Prabodh Thakkar to give us his opening remarks.
Thank you, Nainesh. Good morning, ladies and gentlemen. I welcome, and it's a great pleasure to welcome Mr. U.K. Sinha, Chairman, SEBI, Mr. Leo Puri, Managing Director, UTI Mutual Fund, Mr. Ashish Kumar Chauhan, MD and CEO, BSC, Mrs. Deena Mehta, Chairperson, Capital Market Committee, Indian Merchant Chambers, Mr. Atul Mehta, President, ICSI, distinguished guests, dignitaries in the audience, and the guest. Mr. U.K. Sinha need no introduction. Somebody who has stood like rock between the players and the market and ethical practice, something that he has directed in the benefit of the health of the market and for the benefit of the common people. Somebody who has never looked back never compromised, and has been standing tall. We had a last pleasure and opportunity to listen to him in the Gift City when the Honorable Finance Minister was presiding a functions where they just opened an International Finance Service Center. We also have Mr. Leo Puri, Managing Director of UTI Mutual Fund. I would like to compliment UTI Mutual Fund for winning the award this time for the promoting the equity market. Mr. Ashish Kumar Chauhan, the great facilitator, the great icon in the capital market. And we have also Deena Mehta, Chairperson Capital Market of IMC. I think IMC doesn't start on the word C and capital market without Deena Mehta, who has been always an instrument in thinking big, thinking future, and bringing all the stakeholders together and create a forum like this. Give a big hand. I think something that Deena has always been doing this. And it's not one event, two event, it's not a lottery, it's not accident. It's consistently to do that. I think it takes a big character. At the outset, once again, I extend a special welcome on behalf of Indian Merchant Chamber of Commerce. I'm standing on the platform of this lovely, very unique and a very prestigious platform, sharing dais with all these dignitaries is a great pleasure and honor. But I must speak something about Indian Merchant Chamber of Commerce. It is 108 years. Quite a few faces here are quite familiar, so I need not mention it, but it would be very, always a matter of our treasure and a pride to say that great Mr. Mahatma Gandhi was an honorary member of Indian Merchant Chamber of Commerce, and we have a document to suggest that he accepted our membership in 1935. Why he became a member? He wanted to promote, he wanted to support the Indianness, the governance, and that was a very difficult time. We were being ruled by foreigners, and that time Indian Merchant Chamber, which came forward, this is the first chamber of commerce which was created by Indian, for Indian, and of Indian. Many institutions and many good chamber of commerce which are also doing a good work have been, they got inspiration from IMC and they were born from the Indian Merchant Chamber of Commerce. There are a number of experts and number of programs which has been outlined today, and I'm sure you will have a very, very fruitful day going ahead. So I'm not qualified and neither I'm expert to talk about the investment climax that India has. But as coming from insurance background and from the IMC platform, what opportunity I had, I can feel and I can tell you, and I know quite a few players are here, they also believe in science, but they also believe in instinct. And my instinct tells me, my feeling tells me, my first-hand experience tells me that India is on its a great march going forward. Now, what does it mean? Somebody will argue it, double-digit growth. Somebody would say it, so-and-so figures and so-and-so GDP. I'm not getting into this. I think important thing is that the growth is inevitable. No politicians, no foreign powers, no negative powers is capable stopping the march of India, and that is thanks to all of you here and our youngsters, which is a 65% of our youth, which is a 65% of our demography. That youth is determined and committed, but they also have an inspirations. So, but there are number of examples, number of countries also in the part of a BRIC, which is also doing a great job. Their economic figures are also very promising. How are we going to be different? We have to be different because we are a different country. We have a different history. We have a different culture. We have a different religion. We have a different practices and history. How we are going to do? What we are going to do is going to be most important thing. There is no one formula which will suggest that this is going to be done and this will become our sustainable growth. Growth is inevitable. Most important thing is to have a growth which I believe with governance, the ethical practice. And that is where somebody like Mr. Sinha, who has put enormous efforts, and not only as a regulator, but coming from a very rich background, he has tried to inspire people. He has tried to give an upside of doing a good governance rather than creating only a fear. This kind of an culture, if this kind of a take, if we have today after this program, is something which will be wonderful. I think another thing, and I was just sharing with some of the dignitaries here when we were walking, I think the biggest challenge that India has is not opportunity, it's not the policy making, it's not the government alone. Biggest challenge that India is going to have is the short supply of skilled labor, skilled talent, the quality managers. That is going to be the biggest challenge that India has. On one hand, we have a large population of graduates. On the other hand, there is an unemployability. On another hand, we have employers, talk to them, they say we are struggling to get the people. So the biggest challenge we all have is to have a quality people. Skill. Now what is skill? Skill is not, colleges and our universities have done a great job. IIT, IIM, the standard universities have done a great job. I think one of the things which is missing in our culture is mentoring. And remember, skill development is not a new buzz to India. As I have been always saying, the governance is not a new buzz. We all from Bombay Stock probably know more, and many people in the western part of India knows. Everybody has a sign, some kind of a good luck sign outside their home, says Shubh Labh. What was that? I think that is symbolic to governance. So governance is again not an imported word from Oxford or Harvard. Similarly, skill development, we had our own way of doing a skilling. We had father to son, son to another generation, and we have been developing our own skill. We had a Guru Shiksha traditions, and we used to develop our own skill. But somehow, having adopted a modern Western business model, we will have to also learn some of the best practices from the Western world as well. We, as IMC, we just visited as a part of our India calling on the eve of Prime Minister's office in the Hanover Fair. And I would end up with one thing, what we experienced. What we experienced is what we saw Germans doing, the dual education systems. While they employ youngsters with a contract, they also mentor them, they also teach them, and they also encourage them. Those contracts are something, is a worth case study, the dual education system and a skill development. And I was surprised to hear that that is a tradition the Germans have for 600 years. You know, we always thought it's nice to be very proud about Indian and our history, but there is also something to learn from others. So I think whether it is a capital market, whether it is in financial, any services, whether it is an insurance market, I think every sector is committed, is definitely heading for growth. What we need is how do we practice? How do we achieve that growth? And if we do it with governance, I think we have the best chance of becoming a superpower faster than we all think. With this note, may I wish everybody a very good morning and a very good day. And once again, thank you, Sinaji. Thank you very much, Mr. Chavan, and all the sponsors, and also Dinaben for organizing and making all the stakeholders coming together under one shelter. Thank you very much. Have a good day.
Thank you, Mr. Thakkar. I now take the pleasure of introducing to you Mr. Ashish Kumar Chauhan. Mr. Ashish Chauhan is currently the MD and CEO of BSE, the first stock exchange of India. BSE is ranked as the largest stock exchange in the world in terms of number of stocks that are listed. Mr. Chauhan has been a Distinguished Alumnus Award for 2014 by his alma mater, the Indian Institute of Technology of Bombay. In 2014, he's received the Best CEO in the Financial Markets in the Asia Pacific by an Asian banker. He was also ranked amongst the top 50 Chief Information Officer by several magazines and institutions between 2005 and 2009, including CIO Magazine US. Mr. Chauhan is best known as the father of the modern financial derivatives in India. He was a part of a team of 5 people selected from IDBI to set up the National Stock Exchange. At NSE, he set up the first commercial satellite network, initial technology platform, Nifty Index, NSE certification in financial market, the NCFM, listing, derivative markets, etc. At BSE, he has been responsible to bring the fastest trading system in India with 200 microseconds response time. He's also considered as an expert in financial market policies, microstructure, information technology, organized retail, telecommunications, cricket, and Indian social issues. He's worked as a CEO of a cricket team in its favorite years, Mumbai Indians, in addition to his role as a president and the CIO of Reliance Group. He and his writings have been quoted in various magazines, newspaper, and other medias worldwide. Welcoming here, Mr. Ashish Kumar Chauhan.
Respected Chairman SEBI, Sri U.K. Sinha, President IMC, Sri Prabodh Thakkar, Srimati Deena Mehta, Chairperson Capital Market Committee IMC, Sri Leo Puri, CEO UTI Mutual Fund, Sri Atul Mehta, President ICSI, Sri Pradhan, Secretary General IMC. I would like to start by thanking IMC for organizing this event on the topic. I believe there couldn't have been an apt place to discuss investment outlook for 2015. I would also like to thank Srimati Deena Mehta, who has been also a past president of BSE, for selecting this venue. The hall where we are all seated today is the International Convention Hall of BSE. It used to be the trading ring. It has seen the development of Indian capital markets over past 14 decades. As all of you are aware, BSE was established in 1875 as the Native Share and Stockbrokers Association. It is entering into its 140th year this July. Since inception, BSE has offered an efficient capital raising platform for companies in India. About 2 years ago, when I used to walk on the Lal Street, mood of the people was very grim and dull. But today, the mood of the people on the street is joyous and filled with hope. A lot of credit goes to the new government led by Honorable Prime Minister Shri Narendra Modi. Some credit also goes to SEBI for making market more secure. Even the world leaders have started looking upon India with a lot of expectations and hope. International ratings company Moody's has raised the outlook on Indian economy from stable to positive. World Bank has also increased its GDP projection for India. In last 12 months, FIIs have invested more than 1 lakh crore in equities market. Fiscal deficit is well within the target range. Inflation has come down to the comfort level of Reserve Bank of India. Many other parameters on the economic front are looking much better. Investments come with a lag, but I believe this will happen over the next 6 to 18 months. In this context, one has to ask, what is the role of a stock exchange? Is it a place for trading, or is it more than that? For me, stock exchanges have to support the society in which it works. And India needs to create 15 million new jobs every year for next 20 years. India needs to create 300 million new jobs over next 20 years. For that, India will require to invest at least $1.5 to $2 trillion in just infrastructure over the next 7-8 years. Can the stock exchanges help India raise $150 billion a year of capital, either by way of equities or debt or hybrid? And that should be the main job of a stock exchange going forward. India, if it has to achieve 9 to 10% of growth, it has to invest that kind of money either from the retail investors or foreign investors. Today, we have only 2.75 crore investors registered with BSE. We need to take it to 27 crores over the next 20 years. Mr. U.K. Sinha has been a very tough but a quiet reformer. In my opinion, I have been in this business for almost now 25 years. And in my opinion, in his tenure has seen the biggest and the boldest reforms in Indian capital markets. Some of it are actually yet to come. Interest rate futures are slowly taking shape. SMEs are now almost reaching 100 number in listing. IPO reforms have actually reduced the volatility on the first day. IPOs will now be listed within 5 days of IPO actually taking place. takeover code has changed. Collective investment schemes, we are all aware the toughness that he has shown. The Stock Exchange and Clearing Corporation guidelines has actually changed the way stock exchange and clearing corporations work. In fact, there are many more reforms that he has done quietly, and they have been very, very effective in making India one of the safest markets for investors for future. For me, 92-93 was a period of reforms. After Arshad Mehta scam, we realized that we need to reform. But we realized partially. We only reformed the broking area. We completely changed the structure of exchanges. We changed from manual to automation. We had clearing corporations, depositories. But the other side of it, that is the banking sector, remained where it was. We thought if we reformed the broking sector, the exchanges, it will solve our problems. But in fact, it became only a one-sided affair. In fact, we had to do reforms on both. Now, that realization has dawned on Indian policymakers. And now, the new budget that is yet to be passed has several reform agendas contained within itself that includes getting the government bonds into the retail sector by setting up a PDO. And I hope over next 1 year, we'll see some IPOs of government bonds coming through stock exchange in retail hands. Similarly, commodities markets, the regulator, FMC, is getting merged into SEBI. It's a welcome move. And somewhere on the line, the commodities also will start getting traded in a more safe, secure manner on stock exchanges. International Finance Center that is being set up at Gujarat, Gift City in Gujarat, is also a milestone that will go a long way in fetching India the $150 billion a year going forward. BSE is the world's largest exchange in terms of number of listed companies at 5651. The market capitalization of the fastest exchange of the country has reached the benchmark figure of 100 lakh crore in November last year. In the past couple of years, BSE has launched a number of market-leading practices such as BSE Currency, BSE Derivatives, BSE SME, trading in interest rate futures, mutual funds, distribution through exchanges, and so on and so forth. I'm glad to inform that BSE leads the industry in many of these business segments. India's first stock exchange also has become India's fastest with 200 microseconds response time. In 1 second, there are 1 million microseconds, and we give you response time at 1/5000th of a second. We are trying to take it to 20 microseconds, but that is not the purpose of the stock exchange, as I said. The main focus is on raising capital for India, Indian corporates, Indian government, and so on and so forth. Till now, Indian stock markets have given you only one set of instruments, that is risk instruments and riskier instruments. Equities are what we call risk instruments, and derivatives what I call riskier instruments. We never give you the risk-free instruments. With the government bonds coming, as and when they come on the stock markets, we are going to also give you risk-free instruments. And with that, people who are risk averse, they are also stock market averse. They will start coming into the stock markets. We will be able to get, today, India saves 30% of its GDP, but only 10% of that saving comes into financial instruments. I have a huge hope that we would be able to get at least 50% of India's saving into the financial markets. With that, thank you very much for coming in the morning.
Thank you, sir. May I now introduce to you Mrs. Deena Mehta, the chairperson of the Capital Markets Committee of the Indian Merchant Chamber. Mrs. Deena Mehta is a stock market professional for 3 decades. By qualification, she is an MBA in finance and an associate member of the Institute of Chartered Accountants of India. Mrs. Mehta has been associated with several reforms in the capital market, including the setting up of the BOLT system at the BSE, setting up the CDSL, the streaming of Clearing Corporation, BOISL. She has been on the board of BSE for 9 years and served as a vice president and the president of the exchange. Mrs. Mehta is the first woman to enter the BSE trading ring and also the first woman board member and the president of the exchange. Mrs. Mehta has served on several committees of SEBI for the past 21 years, since SEBI's inception and contributed to various reforms undertaken by the SEBI. She's also the founder member of SAFE, Association of Stock Exchange of SAARC countries. Several organizations have awarded her for a contribution to capital markets. She is also a part of the outstanding young person IMC for contribution of banking and finance. She's given an award by Z Business for contribution to capital markets. She's on the advisory board of BSE and also on the board of National Payments Corporation. Mrs. Mehta is also the managing director of Asatsi Mehta Investment Intermediaries. So welcoming here Mrs. Deena Mehta, who will introduce us to the seminar.
At the onset, let me thank all of you for being present in one more program of Investment Outlook. Last year, SEBI chairman threatened that I will not come every year to the program because I have nothing new to say. But let me tell you that, SEBI is the fuel that really powers the engine of the capital markets. We cannot have a situation where SEBI is not part of something which is very futuristic, which is what this program is all about. And I think so many people, I have heard them talk, that the stage at which the country is today is a moment which has been never before. The kind of optimism, of course, there are some armchair intellectuals who keep on saying what has happened in the ground of 1 year of the government. But then there is still a lot of hope which is there in the entire system. And the gears that have been put into motion in each and every sector of the country, I think gives us a lot of hope that the next 10 years that we will see would be really game-changing so far as not only the economy, but lives of every Indian citizen. The government is not just looking at the Track 1 reforms, which is getting the GST in place, which is getting the Mines Act, or the various bills are being passed. But we are also looking at Track 2 reforms, which will include bettering the life of every citizen. Being in India, in the city of Bombay, it is like a big garbage dump that we are in, because wherever you go, there is garbage lying all over. So it will affect us, where we will see a cleaner place which is there. It will affect the person in the rural area. It will affect the person who is staying in that Juggi Jopadi, and he would get a better house to stay in. There would be electricity, there would be toilets. So the all-encompassing reforms which are happening in the markets, in the economy today, I think is really going to contribute for the prosperity, because everything, I would say, boils down to the stock market. For me, the stock market is the center of my universe. So I feel that every change which is happening in the entire country is going to impact the stock markets. And that is what this seminar is all about today. We are going to talk about the various asset classes, and this time we have slightly changed the focus and tried to talk about the modern developments which are happening. Like we are going to talk about the Coal and the Mines Act, we are going to talk about smart cities, and we are going to talk about how retail participation and provide guidance to the retail. As Ashish rightly mentioned, there has been hardly 2 to 3% growth so far as the Demat account holders are there in the country. And I think the Demat account is the first step to bring any person into the markets, and especially more so when we want the Demat account to be a safe deposit vault for your insurance policies, for your mutual fund units, and for your equity accounts. The way the retail participation has been growing, I think we need some out-of-box solutions in order to really jumpstart the number of people who are participating today in the equity markets. And I would suggest that let the Aadhaar numbers which have been given, we have almost 70 crore Aadhaar numbers which are there. The seeding of the bank account to the Aadhaar number, sir, is almost about 12 crore people have been seeded. Because, this work is being done by NPCI, of which I am a part. And the direct benefit transfers which is happening today is through the Aadhaar accounts, or the Aadhaar and the bank account, the combination which is there. If we can do, something very innovative by saying that every person who has a bank account seeded to the Aadhaar number, we just go and allot demat accounts to all of them, because their KYC has been done, their bank account details have been available, and it is up to the person or the investor just to go and request that please make my number available and map me to a particular broker or a mutual fund or RTO or wherever. I think this kind of innovative steps, without compromising on the risk that non-KYC has to the system, I think would really give a big push. Because if we have the Jan Dhan Yojana, we should have a similar Jan Sanchay Yojana, where if Prime Minister can get, just by, of course, talking, he's talking, everybody else is working. But I think we, through the use of technology, can get at least 10 crore demat accounts straight away if this kind of innovative thinking is done. So that is, at IMC, we have been talking about having 10 crore demat accounts. And this is one way we can overnight have 10 crore demat accounts, because the two drivers of the markets are going to be, one is going to be the OFS, which government is going to put lot of effort. Following the success of OFS, lot of IPOs are going to come to the market. And a very welcome development that we have seen in last 6 months is lot of investors are going to mutual funds, and the mutual funds are getting inflow of money. So these three things, if we want to really accelerate these three things, which are going to bring money for useful purpose and take it away from physical assets, then it is necessary that we create a huge highway where all these people can come in, they can travel, and they can make use of the OFS, the mutual funds, as well as the IPOs. Similarly, another important thing which we need to promote, as Ashish rightly said, is the retail GSEC market. Earlier when we started our career, people used to stand in queues outside the Reserve Bank of India to subscribe to the government securities which were issued. People used to actually stand in queues. Today, of course, the percentage of people who are participating is very minuscule. And this whole link has broken down after the depositories have come, because the retail investors are linked to the depositories, whereas the GSEC is outside the scope. What is happening today? People go and put money in the banks. The banks go and buy government securities. Most of the banks are excess on the SLR and other norms, though government keeps on reducing the SLR rates. But actually it doesn't benefit anybody, because the banks are already excess invested in these kind of instruments. And they charge 2 to 3%, and that is their profit margin, and then they go and invest in SLRs and other places. Then why should the retail investor not go directly and buy the retail and GSECs from the Reserve Bank of India, which will be contributing at least 1 to 2% to the government treasury because of the lowering of cost for the government. So these are, I felt, two things. One is on the equity side and other is on the debt side, which will really help the saving of money. It will put money in the pockets of the investors. And if you look at Margaret Thatcher model, when she went about in a large-scale disinvestment in UK, the retail participation was largely encouraged, and people were made to open accounts and go for these things. So I think if we are going to have 60 or 70,000 crores of disinvestment happening, this is a golden opportunity to really bring the retail investors into the market, and we as regulators and we as market participants should not miss this opportunity to get these people into the markets. So the next thing that I would like to briefly touch upon is the listing of the Bombay Stock Exchange. The government, when SEBI itself approved the scheme, so far as the demutualization of the exchange was concerned, it was visualized that brokers would have only 49% and 51% would be held by other than brokers. So what was visualized was a process of transfer, and I think this process of transfer has to happen through listing. And this is one thing I would urge Chairman to really look at, because listing brings transparency, And if we want to say that our stock markets are barometer of the economy, then every sector of the economy should be represented in the markets. Of course, we don't have the airline, the transport sector not fully represented. With the mining and other sectors coming in with this investment we'll be having. Similarly, the exchange also should be represented. There are a lot of grey market transactions happening, sir. I'm sorry to say from this platform, but a lot of grey market transactions are happening because people are having appetite to buy exchange shares. In such a situation, it would be in interest of everybody if we get a listing of the BSE. And last but not the least, I think there are a lot of challenges in front of us. The speed with which the transactions are happening in the exchanges is getting a lot of people into the markets. New kind of participants are coming, new trading strategies are coming. And I think all this is creating a challenge before the regulator as well as the market participants who provide entry to various kind of individuals, various kind of strategies and various kinds of products in the market. And therefore, we need a very strong base so far as risk management is concerned. SEBI, I'm happy, is being the pioneer regulator so far as the world is concerned in trying to regulate algo trading and other things. But I think a lot more knowledge also needs to be given to the market participants on how to, really, we do our KYC, but how to understand the various intricacies with which, the technology is getting interwoven into the scheme of things. And I'm sure that we should be able to really try to stop any kind of wrong things which can happen in the market. So, this skill development that we talk about, I think now we need more knowledge on how to manage the business of broking with the new challenges in terms of speed, in terms of technology, which is, which is sweeping the entire market today. So these are the two, three schemes, challenges which I felt are before the markets, and as market participants, we are little less equipped. I am sure as a visionary, SEBI and the exchanges would provide the kind of support which is required for promotion of retail markets and for really strengthening the intermediaries to get ahead and see to it that the fruits of, I am sure, we have very few scams which are happening outside the market, and we hope that in next 10 years we have no scams also in the market, which would really be possible if the market participants are really strengthened. Sir, on that note, I would request all of you to take part in today's program. Because we have got very eminent speakers who will be talking about various asset classes, and we have a galaxy of almost 25 speakers who are going to talk on various subjects, and the challenges before us and how these challenges will really shape the outcome in 2015. Personally, everybody keeps asking me, what do you think of the market? I said, standing in the BSE Convention Center, which is the heart of capitalism in this country, I think the times would be really better. And we really need to be equipped to cash on these good times. With that, I would like to, extend a very warm welcome to all of you for this program. And moving forward, in line with what I said is that we do encourage equity, very sustained equity investments in this country. So last year we had honored LIC for having a very sustained long-term investment strategies in equity and promotion of equity culture, because ultimately the retail investor, whenever a person has money, he first thinks of putting money in FD. So we should have, equities or mutual funds as the first choice of investment. And I think one organization which has contributed to this is Unit Trust of India, with a long history of encouraging investments. You know, when people didn't even know about the FERA dilution and other things, it was Unit Trust of India which actively participated. So I would request SEBI Chairman as well as Mr. Thakkar to hand over a certificate or a memento to Mr. Leo Puri, who will accept on behalf of Unit Trust of India. And I would, sorry. Sir, I would just like to read it. UTI has contributed immensely to development of capital markets in India. We would like to take this opportunity to acknowledge and honor UTI for pioneering efforts in providing the backbone to the entire financial market. The long-term vision of UTI's investment team has given depth to the markets. UTI has not only provided security to the fund holder, but also good returns on their investment, accepted by Mr. Leo Puri.
Let me introduce to you Mr. Leo Puri. Mr. Leo Puri is the Managing Director of UTI Asset Management Company. In his career of 30 years, Mr. Puri has previously worked as a Director of McKinsey & Company and as the Managing Director with Warburg Pincus. Mr. Puri has worked in US, UK, and Asia since '94 and has been based in India. He has a master's degree in PPE from University of Oxford and a master's degree in law from University of Cambridge. May I now welcome Mr. Puri to speak a few words.
Respected Chairman, Mr. UK Sinha, SEBI, and distinguished members of the dais and distinguished guests, let me say how honored I am to accept this token of recognition from the Indian Merchants Chamber, and itself an institution with legacy, in the BSE Convention Hall, of course, also an institution with legacy, and at the hands of Mr. UK Sinha, who I think, as many of you know, has been instrumental in not just the development of capital markets, but also from our perspective in the development of our institution, both in his role as a government servant and, of course, as a leader and then as a regulator. So it is a tremendous honor, and I thought I would just take just a minute to reflect with you on the legacy that this institution has and how we intend to ensure that it remains relevant in the contemporary scenario, and pick up on Mrs. Mehta's theme of the importance of retail participation. I think we all know that the legacy of UTI rests on a simple principle that the then Finance Minister Krishnamachari had, which is to find a vehicle for enabling the retail or the common man in India to mobilize his savings to help contribute to the industrialization of India and to profit from its fruits. It was a simple and very powerful vision, and I think UTI executed it remarkably well over the last 50 years. It's our 51st year today. And it's a vision that remains, if anything, even more acutely relevant today when you look at where we stand. And without basking in past glories, I think it's worth remembering that what UTI achieved was a process of what today we call financial inclusion, but of course it did not have that fancy title at that point in time. But it was absolutely embedded in the mission that UTI had to find a way to reach every household, certainly every middle-class household, and to extend beyond that. And there are a number of firsts which the institution introduced. Of course, the iconic US 64 scheme, but beyond that, it was the first institution to introduce ULIPs. It has introduced a number of schemes directed at the marginal households in society, many of which continue even today. It has innovated in terms of debt funds and hybrid funds, retirement products. And of course, in some ways, it led the way of the development of the venture capital industry in India as well. But coming from an institution with this remarkable history, there's a tremendous obligation not to simply have a sense of entitlement, but to always ask yourself, how will you remain relevant in terms of the challenges today? Institutions, particularly great institutions with history, and I think this is true of the BSE as much as any other, as it is of UTI, have to reinvent themselves. They will stumble, they will fall, but the greatness of an institution comes through in its ability to reinvent itself. And I think that is what UTI has been in the process of doing. If I look at the opportunities today, there are three huge opportunities before us. One is just remembering what our primary mission was. How do we continue to increase participation and the democratization, in a way, of India's citizens in the process of wealth creation? We have not come close to achieving the potential of that. We may choose to call it financial inclusion, but it is simply an extension of that vision and theme of participation and democratic access. There are many challenges that we are overcoming. I think technology will be a big help in that regard. Regulation, I think, has struck a very fine balance between investor protection and industry development now. There is always issues of taxation and government policy. I think those are going to be supportive. And finally, there is a macroeconomic environment, which I am convinced will support the growth of the equity culture in India over the next 5 or 7 years. So given these tailwinds, this is truly a once in a decade or maybe even once in a 3 or 4 decade opportunity for us to really deepen participation. We have 1 crore shareholders or folio holders today. That number could be 20-fold if we get this opportunity correct, and that's our first significant opportunity. The second opportunity lies in what today we call alternative assets, but simply means the monetization of real assets, which, as we know, is an obsession in India. A lot of thought has gone into monetization of gold. We are beginning to think about monetization of real estate. I think all of us understand how much wealth is tied up in these two asset classes. Around the world, the monetization of these two asset classes has fueled equity markets, has fueled, in a way, the creation of an investment culture with liquidity, transparency, regulation, and again, opportunities for wealth acceleration. I'm confident that we will finally find a way to break this Gordian knot as to how we monetize. We should not give up simply because we have tried in the past with gold and perhaps not succeeded to the extent we would have liked. We must try again, and we must succeed with real estate. There is far too much wealth tied up. Future returns from real estate are going to be far lumpier, far less predictable as the economy matures. So the monetization of these two, I think, is a project that we must not lose sight of as we build capital markets. And the third is the balance between global flows, if you like, and the development of our own market. Global flows will remain incredibly important. A quarter of our market is really, in effect, owned by FIs, and we know trading velocity, of course, is far higher, more than 50%. That's good news and bad news. Of course, it's good news, and we are delighted that the world is once again taking interest in India. But we must be thoughtful about how we will balance this in terms of the creation of a strong domestic institutional capability as well. And in any country that has achieved this, it rests on 2 pillars. It rests on enhanced retail participation, and it rests on a deregulation of the pensions market. That is how every country in the world has essentially built its domestic institutions. And I would simply say that I'm again optimistic that we have just about started on a path where both of these trends will be seen. I'm optimistic about what we're beginning to see in the realm of pensions reform. And I, of course, as I said earlier, I'm very optimistic about what we will see in terms of retail participation. So I would leave you with the message that UTI is an institution that is very proud of its history, but not resting on its laurels, is thinking hard about how to remain relevant. I think we are at a watershed in terms of enhanced participation and the creation of strong domestic institutions in the capital markets. And I'm deeply honored that you've selected UTI for recognition this year. Thank you very much indeed.
May I now take the opportunity to introduce to you our chief guest, Mr. U.K. Sinha. Mr. U.K. Sinha has been appointed as the chairman of the SEBI with effect from February 18, 2011. Recently, Mr. Sinha was conferred by Economic Times the Business Reformer of the Year Award for 2014 and for raising standards of corporate governance, strengthening the SEBI as an institution, and increasing confidence in India's capital markets. He is also a recipient of the 10th CNBC TV18 India Business Leader Award for outstanding contribution to the cause of Indian business. I now welcome Mr. U.K. Sinha to give us some insightful words.
Good morning, everybody. Mr. Prabodh Thakkar, President IMC, Mr. Ashish Chauhan, MD Bombay Stock Exchange, Mr. Leo Puri, MD UTI AMC, Mrs. Deena Mehta, Chairperson Capital Market Committee of IMC, Mr. Atul Mehta, Mr. Arvind Pradhan, invited guests, ladies and gentlemen. I'm reminded, and Mrs. Mehta mentioned it in her talk, that when I came here last year, I had requested her that she should find somebody else who can be here on this occasion, because last year it was my second time. But she has been so persistent, and I must say that the commitment that she exhibits and the dynamism that she brings to IMC, it is virtually impossible for anybody to say no to an invitation like the seminar on the investment outlook. And this is the third year in running that I have been participating here. Friends, a number of things have been said about our economy and our market. I would like to begin by saying that there is a new sense of optimism and confidence running through the whole length and breadth of this country. We are an economy which size is more than $2 trillion. We are 7th largest in the world on nominal terms, and we are projected to be the 3rd largest on nominal terms by the year 2030. In fact, even today, on PPP basis, we are number 3, but by 2030, we are projected to be number 3 even on the nominal terms. And we have a diversified economy. We are not concentrated only on one element like some countries of the world have on commodities and thereby run the risk. Our market cap is more than $1.7 trillion. And the ratio of market cap to GDP is very healthy, around 86-87%. The cumulative foreign portfolio investment in this country is more than $180 billion. And if we look at their value, I have the value as on 15th of April, it is $385 billion. The GDP, as projected by IMF, I'm not talking of Government of India predictions or the projections made by the Reserve Bank of India. The projections made by IMF in April, that is this month, for 2015, the projection is 7.46%. And for 2016, 7.47%. RBI projections and government projections are even higher. But the important thing for us to note is that as per the IMF projections, in the year 2015, India is going to be the fastest growing economy, leaving behind our neighbor, which has been growing for the last 3 decades at a very, very high rate. So we will be the fastest growing economy this year. The compounded annual growth rate of our market has been very healthy. If you look at 5-year, 10-year, 15-year, 20-year, or from 1st April 1979 when Sensex was first calculated. So while all these things have happened, we are also noticing for the first time in this year after a gap of 4 or 5 years, that the domestic flow in the equity market through the mutual fund route has been hugely positive, more than 71,000 crores net inflow in the equity market. While all these things are happening, I would also like to caution some of the challenges and risks that we run in this country. But before I talk of that, I will also like to mention some of the recent things which SEBI and the government has been trying to do. I'm not going into details of what has been done in the last 5 or 10 years, but some of the recent measures that we have taken. I would like to mention first the regulation with regard to real estate investment trust and infrastructure investment trust. These regulations are in place. In the finance bill, government has already made some announcement about capital gains tax. That point has been clarified. There are 2 pending issues even today on REITs with the government on the tax front. I have no clue what the government is going to do, but I'm aware that government is actively considering those 2 measures. The SME platform initiative which was taken and which was implemented about 2 years back, that I would say has been a reasonably big success. In the International Organization of Security Commissions, this initiative of India has been very well appreciated. Many countries such as Philippines, Brazil, they have been also thinking of how they can help their SMEs to get listed and raise capital. I'm happy that, I think, Ashish, you have got 94 companies? Huh? So 94 companies have been listed in BSE alone. NSE has also got some companies listed there. And I'm sure over a period of time, the listing of those companies will also increase. Some of you might be aware that SEBI, stock exchanges, SIDBI, and India Venture Capital Association, we have been going to different parts of the country. We are meeting a small investors, small promoters, and trying to find out what facilities we can provide to them, what information and knowledge we can provide to them so that they can start considering that the good source for raising capital from them, for them is through the market. And you will be surprised that some of the feedback, and we went to places like Coimbatore, we went to Rajkot, Ahmedabad, about 8 or 9 places we have been, and we intend doing it even more. Some of the common feedback we got from SME entrepreneurs in different parts of India was that listing is very expensive. Listing means that I lose control over my company, and our compliance costs will go very high. In fact, in some cases, and I'm sure some of you from the profession are sitting here, in some cases the promoters told me that I have been told that the cost of listing will be as high as 9% or 10%. Now, obviously, if this is the type of message we are giving to promoters of small and medium enterprises across the country, the growth of companies listing on the stock exchanges will actually not happen. So we have to be very mindful of the developmental role that all of you have to play. It is true that the role for development is primarily on the shoulders of the government and on the regulator. But it is also true that all of us who are participants in the market have to take this message forward. If SME listing takes place in a big way in this country, and you know what has been the contribution of SMEs in matters like exports, providing employment, you will imagine what contribution we can make through the mechanism of SME listing. Another area where we have been able to take some measures is with regard to institutional trading platform. This platform was conceived from the point of view that if there are some institutional investors in a small company and the company is not getting listed, how do we provide them an exit opportunity? Some companies have got listed, and now I'm sure some of you may be aware that we are going to come out with an entire new set of guidelines for startups, the technology startups. And we have come out with our discussion paper. I'm hopeful that by June, the SEBI regulations on the startups, and we have thought of in the discussion paper, we have even indicated that we are thinking of doing away with the requirement of declaring somebody as a promoter there. The disclosure requirements will be made less hard. The requirements with regard to staying invested in the company post-listing. So all those things we are going to liberalize. And the feedback, even yesterday we had a very detailed meeting with the representatives from some of the startups, and I'm surprised, and I will encourage all of you to go to places like Bangalore or Pune or Trivandrum or Gurgaon and see what level of entrepreneurial activity is taking place in our country. Maybe some of us are not aware of that. Young people with very innovative minds are coming out with fantastic solutions, having business possibilities and potentials. So all of us have to think together how we are able to provide them some means to raise capital. SEBI has also recently come out with guidelines on municipal bonds, and I'm sure if we want to make 100 smart cities or even develop other cities, we have to provide means of fundraising and capital raising by the municipal bodies. So we have come out with our regulations. We are actually seriously looking towards electronic IPO, and I'm sure in next couple of months, that regulation will also be announced. A mention was made about how to make KYC very simple, and I fully endorse the suggestion. And we are seriously working on it, and electronic KYC is something on which we are going to take our decision very shortly. I'll also like to mention, because Mr. Thakkar talked about his visit to Germany and how he saw that skill development has been a very important growth factor for the growth of that country, Germany. We have felt that for the financial sector, especially the securities market, the need for trained manpower is so acute, and it is so very difficult to get a trained manpower. In fact, as per the last survey done or assessment done, it was not a survey, but it was an assessment done, the total shortfall of trained manpower in the securities market is more than 30,000. There are people who have been trained on matters of finance, but they have not been trained on matters of securities market, especially the compliance requirements, the risk management requirements, and so on. SEBI has set up an institution called National Institute of Securities Market. This institute is already functioning for last 6-7 years. We have now started the process of shifting the institute to Patal Ganga, where Maharashtra has given us 70 acres of land, and a huge campus is coming up. SEBI is funding this project, and construction is fairly in advanced stage. In the month of February, we took some of the business leaders from Mumbai to see for themselves what all is happening there. While some of you may be aware that NISM is working in the area of certification, and there are more than 160 cities in the country where certification or testing is being done. But the main focus of NISM is going to be in the area of providing trained manpower and for the securities market. And for that, we are already conducting exams in the area of, which are in the nature of one-year course. And some of the banks, large banks, have already started utilizing the facilities of NISM for their newly recruited employees. So when the employees are being recruited, they are sent straight away to NISM. They have a 6 months to one year course there, and then they are coming out, and the feedback has been fantastic about the contribution that they can now make. I will encourage all of you to make yourself familiar with what all facilities NISM can provide, and to the extent you feel comfortable, I would encourage all of you to take advantage of it, because the need for trained manpower is going to be larger and larger. If we want our country to go, and if we believe that our country is going to grow at 8% plus, then our market has to grow at a certain level. And if our market has to grow at a certain level, the need for trained manpower is going to be more and more. When I talked about FII, foreign institutional investors, and the money that they have put in this country, even in the year 2014-15, about $45 billion was invested by them. There is one worry in the minds of many analysts, that is our market being driven by the FIIs? Are we becoming too dependent upon the foreign flows? And to a large extent, this matter has to be addressed. This question has to be addressed. I'm happy that in the same year, the domestic mutual fund industry did a very good job. In fact, more than the total net flow that has come in the equity market through the mutual funds, I'm happy that the percentage of money which is coming from beyond 15 cities, that has shown healthy sign of growth. So while we are used to a situation where our fund flows come mainly from the top 15 cities, in 2014-15, the flows from other cities beyond this 15 has grown, and I'm sure that trend will continue. But I'm also very happy to note, and this is something which I have been talking about it, even in last year I had made this point, that we needed a serious reform in the pension area. And I'm happy, and all of us must compliment the government for taking the decision that now 5% of the equity flows into EPFO will be invested in the equity market. And I'm sure other pension funds are also going to follow, and as and when they get more comfort, this 5% will be further increased. You are aware that Ministry of Finance already has permitted them to invest up to 15% in the equity market. And if you look at the numbers, if 15% is coming into the market from the pension industry and the mutual fund and insurance industry also keep growing, then the institutional, domestic institutional flow will be really something which can provide a counterbalance to the foreign flows into the country, and we will have a very healthy and balanced growth in the market. Another thing which I want to say is that we are a $2 trillion economy, and there are various estimates. Even if you look at the growth at the rate of 8%, you can imagine where we will be 5 years from now, 10 years from now. And for an economy which is going to be $10 trillion or $15 trillion, it cannot be expected that only the government or the regulators will provide the leadership for the growth of the economy. All of us, the business leaders, the intermediaries, the participants in the securities market, have also to change their way of thinking and start planning for a situation which is completely different from where India was 20 years ago, or maybe where India is today. And in that context, I would like to highlight that the corporate leadership in this country has to come to terms with issues like shareholder democracy. In many parts of the world which are evolved and developed, you can see for yourself what pressures are there from the shareholders about having a legitimate say in running the affairs of the companies. SEBI has come out with very detailed guidelines on corporate governance. I'm sure you are aware of it, and I don't want to enumerate them. But one area where which I would like to mention particularly here is the area of having board diversity. The area of board diversity and having representation of women in the corporate boards. SEBI has come out with a very small initiative in this area, that is have one women director in the corporate boards. But I'm aggrieved to note that almost 1/3 of the listed companies have not followed the deadline, and the timeline was given more than a year ago. Of course, we had to take some penal action, and we are not very happy about taking the penal actions, and the penal actions have been graded. So if we have given them some time, and if they don't meet those timelines, maybe the action will become more and more severe. But it is not a question of penalizing people. Why can't the feeling and the impetus come from the corporate shareholders and the board itself that this is something which we need to do? In fact, what SEBI has done is a very mild form of ensuring diversity. For example, SEBI has said that you have one woman director. SEBI has not insisted that that director should be an independent director. If you look around the world, and especially I'm talking of some of the European countries, they insist that it should be an independent director. Not only that, there are countries, especially in Europe, where they insist that almost 1/4 of the directors should be women directors. This is one small example I am giving. Why are we afraid of encouraging our women to participate in the governance of our companies? We have talked about related party transactions in our corporate governance circular, and we have talked about a pre-approval of all related party transactions by the audit committee. The remuneration committee having majority representation from independent directors, rotation of the auditors, all those things have happened. But we must, the point I am trying to make is that we must start thinking of the next level so that investors in India and outside India feel comfortable that while the Indian economy is doing well, while the market is doing well, we are also comfortable about the governance of the companies that we have. And lastly, in the same tone, I would also like to mention that those who are participating in the market, the intermediaries and the market participants, also must start thinking in an entirely new way about the need of a young, active population which is investing in the market. I'm pained that we had two recent instances where the intermediaries have walked away with clients' money. And the client's money and the proprietary money was commingled against stock exchange requirements, against SEBI requirements. We had to take some very strong measures, and we'll continue to take those measures. But believe me, our job is not to penalize people. Our job is to talk to you, understand your problem, and to ensure that you and SEBI and the stock exchange, we have to jointly work towards ensuring and appreciating the need of the investor. If we are able to convince the investor that we are able to jointly bring about a very good ecosystem, I think your business will also grow and this country will grow. So I thought I should mention this because this is an opportunity where I could not resist pointing it out, that don't depend upon or don't bank upon the enforcement jurisdiction of SEBI for things to improve. Let us jointly do that. And I also must assure you that if there is any area where anybody feels that what SEBI is doing is wrong or what SEBI is doing is cumbersome, it is impractical, please come back to us. Let us know. We will sit across the table, have a dialogue with you, and try to resolve your issues. But the type of impression, and a mention was made about a scam. I don't, scam is a very strong word, so I didn't want to use that. But let us try together to build a trust in the market. If we are able to build that trust, then the investment outlook in 2015 and for next 100 years will be fantastic. Thank you very much.
I now request Mr. Prabodh Thakkar to felicitate Mr. UK Sinha. I request Mr. Ashokan to felicitate Mr. Atul Mehta. I request Mr. Navneet Manot to felicitate Mr. Ashish Chauhan. I would now request Mr. Ashish Chauhan to felicitate Mr. UK Sinha on behalf of BSC. Before we move on to the vote of thanks, I would like to announce a few initiatives that are upcoming which are held by IMC. On the 30th of April, Thursday, we have the Kelachan Memorial Lecture on Good Governance is Essential for Sustained Economic Growth. This is held by Mr. Vinod Rai, the chairman of UN Panel of External Auditors, honorary advisor to the Railway, and former CAG of India. Another initiative is a conference held by the IMC, Mission Skill Development, Leveraging CSR and Education. This is held on 7th May 2015 at the BSc Convention Center. I would now like to introduce Mr. Atul Mehta, who has been elected as the President of the Institute of Company Secretaries of India for the year 2015. He's also the chairman of ICSI CCGRT. He was the chairman of the Western India Regional Council in 2009. He's also a speaker at seminars organized by other institutions and SME chambers. He's a BCom, BGL, and a fellow member of the Institute of Company Secretaries of India. I now invite Mr. Mehta to give us the vote of thanks.
Honorable Chief Guest Sri UK Sinha, Chairman SEBI, my friend Ashish Kumar Chauhan, MD and CEO Bombay Stock Exchange, Mr. Leo Puri, CEO UTI Mutual Fund, Mr. Prabodh Thakkar, President IM Indian Merchant Chamber, my again dearest friend Mrs. Dina Mehta, Chairperson of Capital Market Committee, my friends from the BSE Forum, Mr. Siddharth, Alok, and fellow member of ICSI, and ladies and gentlemen. Friends, today's price in the stock market are the reflections of the tomorrow's profits. Indian market have witnessed a buoyant trend that indicates the better profit growth prospect for the coming year. Now, this seems to be a start of the golden era, not for the capital market, but also for the Indian economy. Now, many factors have fallen into the right place for the Indian market and the economy. Now, India, the only major country that is projected to see the pickups in the growth momentum. The growth cycle moved from the slowdown to a recovery mode since 2009, and the industrial sector is expected to lead the recovery. Now, this may start out gradually, but growth will pick up speed in the coming year. A lot depends on the government reform-based approach. Now, there has been a steady flow of reform focus of areas like governance, ease of doing business, and fiscal prudence. Last few months, the new government has announced the labor reform, diesel price decontrolled, the Make in India movement along with the progress in the GST talk. Not just that, the government has also extended the diplomatic tabs with to attract the foreign fundings. We can now expect the nearly 55 billion worth of investment pouring over next 5 years from the Japan and China. Such concrete initiatives could lead to an era of the substantial growth in India. Friends, SEBI and Ministry of Corporate Affairs has made Indian capital market benchmarking with the global standard in the terms of technology, disclosure, transparency, and corporate governance. And friends, this new Companies Act 2013 has taken this corporate governance to a next level. And of course, we have a new concept like rotation of auditors, duties and responsibilities of the independent directors. Now, probably India is the only country where the duties and responsibilities of independent directors are being codified. Now, we have a concept of resident directors. We also have a concept of CSR, which is much debated. And friends, overall now first time in India, we have a non-finance audit. Of course, we have this, everybody knows that we have the accounts audit and tax audit also. Now, first time in India, for a large size company, for a listed companies and the large size companies, now there is something called a non-finance audit, where a professional is going to certify that the company has complied all the laws applicable to that company while running a business. So now this is also something new, and this will definitely take a corporate governance to a next level. So friends, of course, there are so many other provisions in the Companies Act which has made this corporate governance at a different level. I wish to place on record my sincere thanks to Prabodh Thakkar, President Indian Merchant Chamber, Mrs. Deena Mehta, Chairperson Capital Market Committee, IMC, for providing me this nice opportunity. Thank you very much. Thank you.